Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Neena Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Neena Mishra. My guest today is Ivana Delevska, founder and CIO of SPRX. And we are talking about investing in AI, cybersecurity, and some other innovative technologies. Ivana manages the SPR Alpha ETF, ticker symbol SPRX, which has done quite well. It is up about 42% over the past year, significantly outperforming the S&P 500 index, which is up about 16% during the same period. Ivana, welcome back. Great to have you with us today.
Thanks for having me, Neena.
So I wanted to start with Nvidia because the most anticipated market event next week is Nvidia's earnings. And for reference, we are recording this on August 25th, and Nvidia is reporting on the 27th. And the earnings could significantly impact the markets. It is the most important company in the world. So I wanted to start with your earnings outlook. Since NVIDIA is the top holding in your ETF, it has almost 11% weight in the portfolio.
Well, Neena, I think you're spot on. NVIDIA is really the biggest event coming up for the data center value chain, AI, and even more broadly, I would say, for technology. I think the setup is very favorable this quarter because investors are not super bullish going into the report, which is generally positive because you have the potential for an upside surprise. From fundamental perspective, they're going to be ramping Blackwell systems in the second half. It's not clear whether they're going to have fully ramped in the third quarter. So that's something that we're very closely watching. We think that they're ahead of schedule. So this is why we like the stock and why we own it. But that's the biggest question here, whether the Blackwell systems ramp is going to be ahead of schedule. So that's the main thing we're watching going into earnings.
So now let's talk a little bit about the broader tech sector, particularly the AI trade. And we know that AI stocks have been under pressure this week, and some high flyers like Palantir have seen significant sell-off. And this was driven mainly by two factors. There was an MIT paper warning that 95% of companies which they surveyed have not yet seen any returns on their Gen AI investments. And then there were some comments from OpenAI CEO Sam Altman as well, who was suggesting that some investors have become overexcited about AI. So as a result, now there's growing talk about this AI bubble. So what's your take? Do you think AI is in a bubble?
Well, Neena, I think that's a great question. I don't think AI is in a bubble. However, I don't disagree with the paper. And this is what we've been hearing also from the companies we survey, that the returns on investment are still not there yet. Now, that doesn't mean that they're not coming. And it doesn't mean that more applications that are actually used for aren't coming. We think they will be coming in the next 5 to 10 years, but it takes a long time to develop applications that actually generate returns on invested capital. And similar, even for the infrastructure, I would say like a lot of the companies like Microsoft, like AWS, and like Google, they're investing billions of dollars into this. So it's a big question whether they're going to be able to get the same return on invested capital as they've been able to get in the prior tech cycle. Now, on the positive side, I will tell you that significant investment needs to be made in order to come up with these killer applications, right? So in the first wave of investment, we saw the Hopper architecture from NVIDIA, and really that drove a lot of the large language models like ChatGPT, like its competitors. So those were the first use cases. Now, the second use cases will be these AI agents, right? So they will require significantly more compute. In theory, they're going to deliver looking across different sectors, significant returns on invested capital, but it will take some time to ramp. But the infrastructure side needs to start ramping today. So this is why, going to my prior point, Blackwell is so important. So a lot of the opportunities we see today are more on the infrastructure side rather than the application layer. So whether you're looking at the chips themselves, like Nvidia and AMD, those would be the companies that are leading there. Whether you're looking on the networking side, this is a very underfollowed area that we think is very interesting. So those would be companies like Arista Networks, for example, and Astera Labs. Or you're looking even on the power generation side. These are really the opportunities where the risk reward is pretty high because you're not taking that much risk. You know that companies are going to be have to invest, and you're also expected to get good reward and good returns.
So you mentioned some names here, some tickers. You mentioned AMD, and so in addition to Nvidia, you're suggesting that companies like AMD and Arista, they are going to benefit. They are going to be beneficiaries in the near term. Are those the stocks that investors should be focusing on?
Yeah, absolutely. I think you really we're still in such early innings of the AI trade. You want to be focused on the data center infrastructure side. Applications will come as well, and those are going to be big opportunities. And it's really high on our research funnel, but we haven't really identified a killer applications that is no-brainer in terms of delivering returns that is easy to scale.
So let's talk about cybersecurity now. And I noticed that your ETF has significant exposure to cybersecurity stocks. I think it accounts for more than 20% of your portfolio. And we know that cybersecurity has become a critical theme, particularly in the age of AI. And it is expected that this global market for cybersecurity products and services that will see immense growth because we know that companies are adopting, they are using AI more in their operations, but criminals are also leveraging the technology. Cyber criminals are using the AI technology to amplify and intensify their cyber attacks. So talk to us about how cybersecurity companies are adopting to and benefiting from AI.
Well, Nina, I think you're spot on. The two big opportunities on the cybersecurity side as it relates to AI are first on protecting these AI agents that are coming to market. And then also a lot of the AI agents will have kind of counter agents as well, right? So really the key here is protecting the agentic AI use case. And anytime you're using a browser that has an agentic AI overlay, you're going to need to have that protected. Not necessarily if you're a consumer, but for large enterprises, that's going to be a no-brainer, right? They're not going to be allowing their employees to be accessing AI models and feeding company data onto them and layering agents. So here is like one big opportunity where we see a lot of upside in just this enterprise securing browsers and securing AI agents. And then the other side is that companies are also leveraging AI to build cybersecurity agents. So this is kind of a separate opportunity, right? Where it's not really protecting AI, but it's using AI internally to displace some of the cybersecurity employees on your team. So with using a cybersecurity agents, you can run significantly smaller organizations on that side. So we're seeing upside both on protecting AI agents, but also increasing productivity and coming up with cybersecurity agents. Some of the companies that I would mention that are very well positioned here on protecting AI agents would be Palo Alto Networks. I think their recent acquisition of CyberArk really positions them well to amplify this use case. I think the stock sold off on the news because investors didn't quite understand the need for doing such a large deal. It's the first deal of this size that the company is doing, but we think that they have a pretty proven track record in M&A with smaller deals. And now that they've grown in size, it's just natural to up the size. And then on the other side, in terms of companies coming up with cybersecurity agents, CrowdStrike is one that is positioning itself very well. And their agent is called Charlotte, but even more broadly, they're able to leverage all of their other products that feed into these models. So cybersecurity is definitely a very good area. It's also a very good risk reward, because usually, even with some downside, when you see pullbacks in the market, cybersecurity tends to perform slightly better than the rest of our universe.
Very interesting. And let's move on to another very interesting topic, which is investing in space. And we have seen a lot of buzz around space companies this year. And we know the most valuable space company, SpaceX, is still privately held. It is reported to be highly profitable, but regular investors don't really have a way in. So obviously, they are looking for other ways, looking at other companies to get exposure to the space theme. And it has not been easy, it seems. So there have been some high-profile space IPOs also this year. And for example, Firefly, Voyager Technologies. So I noticed that they kind of skyrocketed on day one, and then they came crashing down. And looking at the performance, Firefly is actually now down 35% since its debut, and Voyager Technologies is down 57%. On the other hand, there's this company called Carmen Holdings, which is up about 69%. So a lot of divergence in performance. And obviously, this is a tricky area because developing rockets and spacecrafts, this takes years, if not decades, and huge amounts of investments too. And I saw that space exploration is one of the secular themes that your ETF invests in or intends to invest in. So I was interested in your thoughts on investing in space.
Yeah, Nina, that's a great question. So space is one of our core pillars. And just to give you some background of how we invest, we basically cover a universe of about 120 stocks. And at each given time, we identify sub-themes that we think will deliver outsized risk reward. So we're really focusing on the risk side as much as we're focusing on the reward side. And from this perspective, space is not screening very well, because while we think there is a lot of potential for strong returns, the risks at this point are pretty high. And you'll notice a lot of the companies that are coming to market will be unprofitable without a clear path of reaching profitability. And while we are okay with investing early while the companies are unprofitable, the path to profitability is really important for us. So this is why we have very limited exposure, close to no exposure to the space space today. But we're closely following it to identify an inflection point where we think the risks maybe are going to be smaller. So you're going to see more companies coming to market, and over time, it's going to be a little easier to identify the winners and the losers.
That makes a lot of sense. And looking at the performance of some of the recent IPOs, I'm glad that your ETF doesn't hold those companies. So tell us a little bit more about your investment process. So this is an actively managed ETF, and I saw that it's a pretty concentrated portfolio and quite top heavy as well. So tell us a little bit about your investment process and some of the top holdings, which are not called NVDA, which is about 11% in the portfolio, as I mentioned earlier. Some other top holdings that you are really bullish on as of now.
Yeah, sounds great. So I'll give you a little bit of my background, Nina. I worked for some large hedge funds before starting Spears, such as Citadel, Millennium, and I always focused on the fundamental equity side. So I really do deep dive research, uh, understanding the companies, talking to their customers, talking to their competitors. So that's the investment process is very similar to what I learned while working for these companies. And similar, the risk management process is very similar to how I used to do it while working there. At any given time, we try to identify focus areas, and the key is in the concentration. So really, once you identify a focus area, it's very important to identify 1 to 2 companies in each subspace, which is the way you're going to be able to deliver outsized returns. So what I see a lot on the retail side, people will be like, okay, data center is interesting. And we publish these market maps with all the players. But the issue is that if you buy all the players, you're going to have some that will perform really, really well, and that some that are not going to perform so well. So at the end of the day, if you invest in 20, 30 stocks in data center, 20, 30 stocks in cybersecurity, you're really going to end up with returns very similar to the S&P 500. What we do by identifying 1 to 2 companies is that way we can generate returns that are differentiated with less correlation to the market and to the passive indices. So the key is in identifying the companies. Obviously, the risk with that is that if you identify the wrong ones, your returns can be also differentiated on the downside, right? So that's why we put so much effort into each idea and try to have the most differentiated research that is possible on each individual stock. Oh, and then you mentioned some of our holdings. Yeah,
Mhm.
I'll give you a quick kind of lay of the land of our portfolio. So we really like data center. Within data center on the chip side, we like Nvidia and AMD, as we mentioned. MRVL is a close third that is a bit out of favor, so we're holding on to this into next earnings season as well. The networking side is particularly good risk reward. Astera Labs has been our top pick in networking, and I mentioned Arista Networks is another one we really like. Then on the cybersecurity side, Palo Alto is a newer idea for us. We just recently revisited it after the company sold off on the deal, but we really like Cloudflare. I think they have a very unique infrastructure where they're really controlling a large percentage of the internet. So they can leverage this to launch side products, or they're not really side products, they're kind of core areas like zero trust cybersecurity, like a platform that AI companies can use to build their products on. So that's one where it's within cybersecurity, but it's a broader play on AI. And then lastly, I would highlight the energy side, right? The power generation side. We really like both the power generation companies like Vistra and Constellation Energy. Then also on the power equipment side, we're very bullish on GE Vernova, which is a gas power equipment supplier. So these companies have gone through a pretty big down cycle over the past 20 years, and a lot of capacity has been taken out of the market, which is now at an inflection point. So this is why you see them having strong performance year to date and last year. But even if you look forward, there is still a lot of margin opportunity left for them to capture.
Yeah, good stuff. We'll have to leave it there, Ivana. But thank you so much for joining us today. And also, congratulations on the excellent performance of your ETF.
Thank you. I really appreciate you having me on.
That was Ivana from Spear Invest. Let's recap the tickers that we discussed. So the ETF is SPRX, Spear Alpha ETF. And let's talk about some of the top holdings. So Nvidia, of course, everyone knows the ticker symbol is NVDA. And she talked about Astera Labs, which is a top holding, and the ticker symbol there is ALAB. She mentioned AMD, and the ticker symbol is AMD. She mentioned Arista Networks, The ticker symbol is ANET, ANET. Palo Alto Networks, the ticker symbol is PANW. Marvel Technologies, the ticker symbol is MRVL. And then on the energy side, she talked about GE Vernova, the ticker symbol is GEV. And Vistra, the ticker symbol is VST. Thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcast. Make sure to subscribe so that you do not miss any episode. If you have any comments, questions, or suggestions, please email podcast@zax.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.